Is that what they are saying? The second point. Discuss the principle that should be considered by Luna in recording the sale of goods. When talking about the sale of goods, which standard we have to follow? IFRS 15. Sale of goods to Starlight in Luna, individual financial statement for the year ending 31st March 2006. Conclude on whether the accounting treatment is adopted correct. How many marks are there? 6 marks. Okay, how many marks? According to that, you have to work it out. Okay, what is the second point? Second point is that they have sold on 20th March, they have sold how much? 5,000 units to Starlight at the initial transaction price of 200. And control of goods passed from Luna to Starlight. Payment is only due when Starlight sell the goods and the end consumer, which typically takes 6 months. Starlight has not yet sold any goods on to the final consumer as 31st March. The goods have a high risk of obsolescence and therefore price concessions are regularly granted in order that the goods can be easily transferred within the distribution channel. On the basis of past practice, Luna anticipates that it will grant Starlight a price concession of 8 to 38%. Current market data suggests that maximum concession is 35% may be necessary to distribute the goods. The initial cost of the goods is 80. Recorded the sale at the initial recognition of 200. Starlight has included goods within the closing inventory is 1 million. Revenue and cost of sales is how much? This they have given. Read once. I am going to completely review IFRS 15 for you only with this scenario. Can you tell me the calculation? Small, simple step. Calculation. Can you tell? Anybody is there? Try. I am here to support you. whenever they will give like this between 8% and 38%, is it right? See what is happening. The concept is they have sold 5,000 units. Okay, how much they say sold 5,000 units? Where I will write like this. Is it right? Initial cost. Is it initial?
So the concession means price is reduced?
Yes, price is reduced.
Okay.
Try. I am here to help you.
We take the transaction price 200 per unit. And we multiply it by 35%.
200 per unit. Then, how many units are there?
200 times 5,000 units.
Yes. Initial cost is how much? Initial cost is, see, I will write here. This is only the calculation. Is that this is only the calculation I will put. Okay. How much is the initial cost? Initial, is it right? Initial cost is how much? Initial cost is 5,000 units times 200. It comes to how much? 1 million.
Multiply it by the concession.
Multiplied by the
35%.
Multiplied by the concession. How much is the concession?
35%.
35%. Is it? Now, if you take the how much we can see, they want to reduce the price. Yeah, they are reducing the price. Okay. When you are reducing the price, okay, how much? 65%. Okay, 65. How much they are giving? 35%. They are giving the reducing the price, and how much they will get? 65%. Is it right? Then, what is the revised estimate? Revised estimate is how much? Revised estimate, put like this, it will be more reasonable to understand. Okay, 5,000 units. Okay, 5,000 units. How much is there? 200. How much is there? We are reducing by how much? We are reducing by 35%. Is that 1 minus 35? Okay, 1 minus 30.35. Is that one revised estimate? Okay, 1 minus 0.35. It comes to how much? Tell me fast.
650,000.
650,000.
So this will be the new
revenue.
Revenue.
Okay, the new revenue. Now, how much you have to reduce revenue? You have to reduce revenue by how much? Reduce revenue by either 35% or 1 million minus 650,000. You have to reduce by how much? You have to reduce by 350,000. Are you clear about this?
Yeah.
Now, they have given range. Okay, they have given range. How much they given? 8% and 38%. You have to write. We are not going to do anything, but you have, what is the average? Average is going to be how much? 38 plus 8, 46. 46 divided by 2. What is that? 23%. Is it? If you take the midpoint also, is it that? If you take the midpoint also, how much is there? How much will be the revenue? Revenue will be how much? Revenue will be 500 units times 200 times 1 minus 0.23. It comes to how much?
$770,000.
770,000. Now you have to principles. You have to mention completely. You have to mention completely. IFRS. Okay, IFRS 15.
So now which revenue are they going to
What they have done, how much revenue they have showed in the, what they are asking the question whether they have done it correctly or not. Is it right? Whether we have done correctly. How much revenue they have showed? They have showed the initial, the Luna recorded the sale at the initial price of how much? 200 per unit. See the thing. Luna recorded the sale at the initial transaction price of 200 per unit. Is it right? Can they record it?
No.
They cannot
No.
record it. They have to record it by how much? They have to record it, but this is going to be recorded at the rate of how much? 650,000. Means what they have done is not correct. You have to write precisely. Is it okay?
Yeah.
Okay, now we have this 6 marks. Okay, 6 marks. You have to explain each and, but when you are explaining, you have to explain with the positive ones. Okay, point number 2. I think A2 is there. Is that what is this? Is the A2. You see that discuss the principles. See, this is very critical word. I am telling you this. This is the most critical word. When you say discuss, don't let yourself that why I should write. When they say, see, all the time they are putting discussion. Is it? Morning only I told that the explanation will be 90%. 10% is the calculation. This much is the calculation. We are not going to have more than this calculation. But interesting fact is, we have to build up the things. We have to tell. If you refer chapter 4, there is one question is there. We have done gazebo. We have done one question. Refer, one session, class is over, refer. Gazebo. There was the furniture. They have sold it. Something related to consignment, something is there.
Yeah.
When we should realize, when we should not realize, how it has to be done. Is that there is one other question we have done with respect to magazines also. Is that we have done one question with respect to magazines also, because once it is handed over, then only it should be accounted as a sale. If it is not sold, it is not a sale. Okay, this is what it says. Now, what do you see the thing? Now understand IFRS 15. Luna company sold 5,000. Initial cost is 200. Control of goods passed from Luna to Starlight on that day. Control has been passed. Payment is only due when they sell the goods. See the thing. You have passed the control, but payment will be done only when it is sell the goods onto the end consumer, which typically will take how many months? 6 months. They have straight company has not yet sold any goods to the final consumer. The goods have a high. Now the problem is this: you have taken the control. You will going to pay after 6 when it is sold, and usually it will take 6 months to sell the goods. Now what is the problem? There is a obsolescence. The goods will get spoiled or whatever, outdated. When the goods are outdated, they have to reduce the price. Usually, what is the market conditions reducing the price? 8 to 38%. How much is that? 8 to 38%. Now, what the current market data say, maximum how can you can reduce 35%? Is that how can you can reduce that? That's simple, very simple. You understand this explanation, you will find, you will enjoy the concept. They have transferred the control, payment not made, payment will be made after 6 months. When the goods has been sold, it will take minimum 6 months. Now, during this period, the goods have the chance of getting obsolete, outdated, something like that. Then there is no, this happens. Then they have to go for a sale. When they have to go for the sale, what happens? They can give concession till 35%. Now, what is the revenue they are going to get? They are going to get a revenue of minus 35%. Minus 35%. How much they have to record? They have to record minus 35%, 650,000. But what these people have done, these people have recorded the revenue at 1 million. They have recorded the revenue at 1 million. When they have recorded the means it is not correct. The correct treatment is you have to record the revenue at 650,000. Are you clear about this?
Yeah.
Next time I will explain you like this. You have to write in your own words. There you are going to develop your skills. Very simple. No plus, no minus. The moment I will explain, I will completely, once, twice, thrice I will explain. And you have to write. Unless until you don't write, we cannot develop the skills. Now, what we have to do, I am writing this. See, the same thing, whatever I have explained, I will write. Is that revenue should be recognized? Is that revenue should be recognized? In our own words, there is nothing like you have to write something which, when performance obligation is satisfied. Is it when performance 1 minute, okay, when performance obligation is satisfied. Complete revision of the standard, okay. Is that it can be, this can be, this can be, this can be over a time, over a period of time, over a period of time, or point in time. Is it? No. When happen, see the control, risk and rewards are transferred. Are transferred when 20th March. Is it? When 20th March 2006. Is it? The 20th March. Luna sold. Luna has been sold. Okay. Now, when Luna sold, it is the Luna should recognized. Luna should recognize. Should recognize. Should recognize. Okay. Should recognize revenue at this date. And not when Starlight sell goods to the final consumer. See, very simple, very simple. What you are doing, you are buying the goods and you are selling. Most normal activity will be done like this only. I will buy the goods from somebody, I will close the transaction, then I will sell to other party. It may take 3 months, it may take 5 months, or it may take 10 months. Doesn't matter. You cannot say that when I am going to sell the good, then only I will pay to you. There is no condition like that. When the control has been given, risk and rewards are with me, not with the person who is selling the goods. Okay, and now I am responsible for everything. Is that I am responsible for everything. Now, are you clear about this? Now, what happens? What happens? There is a price concession. Is it right? On that day, payment is only due when it has been done. The goods have high. The goods are of high obsolescence. See the things. The third line. Luna anticipates that it will grant Starlight Company a price concession of between 8 to 38%. Luna is saying, because of this risk, I will give you a concession of how much? 8 to 38%. 8 to 38%. Luna is giving. Who is selling the goods? They say that we will give. And what is the maximum rate? Maximum rate is 35% concession. The price concession, is that the price concession? The price concession offered by Luna is variable in nature. Is it? What IFRS says. Now you have to bring IFRS 15. Okay, first time you are writing IFRS 15. Revenue from customers. Is it? Revenue from contracts with customers. What it says requires that the entity to estimate the amount of consideration to which they are entitled to exchange goods sold. Okay, goods. Anything we can write, add? Now, you have to estimate. You have to take one method. You cannot say that what is there. You have to tell whether it is going to be average method or it is going to be the market value method. You have to, Luna has to give a clear guidance, clear instructions. What we can write? Luna can choose, okay? Luna can choose either. Any idea about two methods are there? We have done this. Any idea about which are the two methods? Either choose expected value method. I am underlining this. Or most likely outcome. Whichever is whichever is best suitable, whichever is the best outcome. Okay, there are two methods are there. So they have the option. Okay, they have the option. Now, if they choose, okay, if they choose, is that expected value method? Is it if they choose expected value method? What will they? Expected value method. Is it right? Expected value method. Expected value method, okay, is nothing but the midpoint or the average How much is there? 8 plus 38 equal to 46 divided by 2. It comes to how much? It comes to how much? It comes to 23%. Okay, 23. Very, very clearly. Our time is also very important. Okay, time is also important. It will result. What will happen? The amount will be 1 million times 1 minus 0.23. It comes to how much? 770. Is it okay?
Yes.
Okay. Time is also important. This is the working. Okay. Keep this as a working for us. Okay. Keep this for a working for us. We have mentioned this. Okay. We have mentioned this. Now, this is one method. Okay, is it that? Most likely is how much? Most likely. Okay, most likely. How much is the most likely if you take into consideration? Is it most likely how much? Sales will be how much? The initial cost. Okay, we have done. Again, don't do any calculations. Okay, again, don't do any calculation. Most likely, the amount. Okay, the amount recognized. The amount recognized. Is it right? As per. Okay, as per workings. You can put it like this. As per workings is how much? It is 650,000. Is it right? It is 650,000. Okay, it is it, and the revenue recognized, by Luna as per the initial cost of initial cost as per the initial cost is how much? Is 1 million. Okay? Is there? This has to be reduced. This has to be reduced by 35%, which is equivalent to 1 minute, which is equivalent to how much? 350,000. Okay. Now, how much is the revenue? They have mentioned it. Is that See, this has to be done in the Excel, okay? This has to be done in Excel. How much is the revenue is there? Is it? Put it like that. Extracts of statement of profit and loss account. They are asked very clearly. If you observe, see the question. What they have asked, how it should be treated. Is that how it should be treated? Fine. Okay, how it should be treated. That is the point number 2. That is the point. Are you clear about this?
Yeah.
Is it right? This is with respect to this. What we have done, again I will revise it. Is that, see how much is there? Very specific. First you have to say that is a point in time or over time. The control, risk and reward are transferred. Is it right? Luna should recognize revenue at this date. Then there is I will put the points here. Okay, I will put these are the points so that it will be very clear. Okay, the revenue, the price concession as per IFRS is this thing. Then we have done with respect to the expected value method. Okay, we have done with expected value method. Then we have done with respect to the most likely method. Now, we have to write whether they have done it correctly or not. What we have to mention? What we have to mention? The treatment. Is it right? Now we cannot say the recognition. The Luna, very simple. Luna company recognition of 1 million as revenue is incorrect. Are you clear about this? Is it okay?
Yeah.
Okay. Next. Can we do the question number for point number 3? Simple, small one. We'll do it and we'll close it. Okay. We'll do it and we'll close it. What they are saying, we'll complete this. Tomorrow we'll take the things. Is that it's slowly understand. Listen carefully. Now if you work on like this, you can understand how the questions will be there. Okay. The only thing we should take time to read the things as best as possible. Using exhibit 1 and 2, present extract that should be included in profit and loss account for the Luna. Your answer should be include only what they're saying. They're asking you revenue, cost of sales and profit. That's all. You are not going to profit of Statlight attributed to the NCI. Okay. Now, what is the revenue is there? It has been sold or it has been not sold? Goods has been sold or goods has not been sold?
No.
It not been sold. Okay. It is not been sold. Fine. It is not. This is the extracts. Which one it is there? A3. Okay, A3. Now, how much is the revenue? Revenue is how much? I am taking the things, okay? You can write like this, okay? Write. Luna is how much? 29,812,540. Okay, Starlight is how much? Starlight is how much? Starlight is 14,185,160. Total is how much? 0, 0, 1, 7, 7, 9, 9, 3, 4. Okay? Now, you have to mention separately. It is not sold. Understand point? It is not sold. Is it? It is not sold. What is the cost? Cost is going to be 650,000. Okay? Cost is going to be 650,000. Obsolescence is how much? Obsolescence is how much? 350,000. Cost is 650. You cannot deduct 1 million straight away. I will tell you why we should not deduct. Okay, why we should not deduct. Okay, now how much is there? How much is there? It comes to how much? Tell me fast.
42,997,700.
42,997,700. Okay, 42,997 minus. Is it? Minus cost of sales. Is it? Minus cost of sales. Okay, minus cost of sales.
Cost of sales will also be unchanged, right?
Yes, cost of, that's what I'm saying. Cost of sales. Luna is how much? Luna is 18,154,020. Starlight is how much? Starlight is 11,042,120. Total comes to how much? 041. How much will come? Do it very fast. 140.
29,196.
29,196. Okay, 29,1. Again, we have to show it separately. Okay, this is not sold. Is it? It is not sold. How much here? What we are doing? We are going to show inventory. Is it? We have to the inventory. How much is the inventory? It is also inventory. Cost is what? Cost is with respect to inventory. How much is there? 650,000. Okay, 650. Obsolescence is how much? Obsolescence is how much? It is 350,000. Okay, anything else? Anything else? Anything else? Very important one. I'm asking you all. Anything we can do? Think and tell. Think and tell. What is the provision for unrealized profit? What is the provision for unrealized profit? See the things.
650.
No. How much they have sold? They have sold how much? 500 times 200 times 500 times 200. Is it right? 500 times 200. It is how much? 1 million. Okay. What is the cost? Very interesting this. How much is the cost? Cost is how much? Cost is how much? 5,000 times 80. Is that 500 times 80? How much is the cost? See, Luna has sold to Starlight. Okay, Luna has sold to they have purchased 400,000. They have sold it for 1 million. How much profit they have charged? They have charged is how much? 600,000. Okay, 600,000. This 600,000 is provision of unrealized profits, PURP. Very, very important. People will miss this. Okay, portion of unrealized. See, understand carefully. You have taken it for, you have purchased for 80, you are selling for 200. Now you have been acquired. When you have made the acquisition, you cannot double calculate the profit. You cannot calculate profit. This goods has been not sold. If these goods has been not sold, on these goods we should not include the profit. Only on cost we have to take that into consideration. I will repeat again this point when we are doing any other question. Okay, I will repeat this. I know this is what it says. Is it right? Portion of unrealized profit. Okay, I will write sale is how much? Sale is 5,000 times 200. It comes to how much? 1 million. Okay, it 1 minus. Okay, cost. Cost is how much? 5,000 times 80. It comes to how much? 400. Okay, it comes to how much? 400. How much is the portion of unrealized profit? Portion of unrealized profit is 600. We have to deduct it. How much we will get? It comes to only this one.
27,596,140.
27,596,140. From the sales you have to deduct how much you will get. 42,997.
17,401,560.
17.
17,401,560.
Okay. Put one dash here. Okay, put one dash. Okay. Are you clear about this? How much is the profit is there? Profit for the year. Profit for the year. 1 second. 1 second. Profit for the year. How much is the profit for the year? They have mentioned anywhere? No. What they have mentioned, how much somewhere they have mentioned, na? Where is that profit for the year? Nine by 12, 9 by 12, 3 by 12. 9 by 12, 3 by 12. How much? Where is that?
Yeah, 1, 2, 3, 7, 9, 2.
1, 2, 3, 7, 9, 2. Where is that?
It was in the first one. Last paragraph of last sentence of the second paragraph.
Last sentence. Yeah, 1365, 165, 056. Okay, 165. See, 165. Okay, we should not write a 165, 165056. Okay, profit for you have to write. See, we should not write like that. Okay, profit for the year. Profit for the year is how much? 165056. Okay, 165. How much is the, say the thing? You have to take 9 months. Is it right? We have to take 9 months. We have to take 9 months. We have to take 3 months. Okay, 9 months. How much is the 9 months? Is it right? NCI. NCI. We have to take only NCI. They are mentioned very clearly. They are talking about the NCI, profit attributable to Starlight. Okay, profit attributable to Starlight only they are asking. Okay, Starlight. Okay, it comes to how much? Once we have to take, is that 165, 165,056 times 9 by 12 times how much? 20%. Till 9 months they have 20%. After 9 months, 056, 3 by 12 times how many? What is the percentage? 30%. Are you understanding? Again, I am asking this equation particularly. Are you clear about this? 165,056, 9 by 12. For 9 months, they have 20%. And after 9 months, the remaining balance 3 months, they have 30%. Is that they have 30%. How much you will get?
24758.
24
247
24758. And this one?
37137.
37137. Check again. 165, 9 by 12 times 20%.
Wait. Yeah, 1 second. The second one is wrong. 1, 2, 3, 7, 9.
1, 2, 3, 7, 9. Total comes to how much?
37137.
1, 2, 3, 7, 9. 371
37.
37.